Hey there, in this video, I'm going to walk you through one of my trading strategies so that you can actually kind of see everything from A to Z, because I know you've probably learned a lot in this program, and I think it's important for you guys to kind of have everything put together here in one place so you can see the actual steps in order to enter and exit a potential trade. And also, this is just an example, so everyone should have kind of their own trading strategy. And you could take some of my pieces and apply it to your own, or go develop your own based on trial and error, or learnings that you are that are taking place elsewhere. So here's the main thing: is that I want to overexpress is that most traders are losing money because they overtrade. Okay. I guarantee you I've lost millions of dollars, and obviously I've made a lot of money trading and managing my own assets. But for sure, I've taken millions of dollars of losses because I have over traded and not sticked to my trading plan. So this is the first thing that most people don't realize that they're doing, but oftentimes you will make way more money if you trade less. And that just comes from a lot of discipline. Okay, you have to have discipline and sticking to a real strategy that you have and going through a particular process whenever you are trading. If you do not have this discipline, you are not going to be profitable. I can almost guarantee that long term. And also, here's the main thing too, is people don't realize that the discipline in your trading comes from your discipline in your own personal life. So that's why if you watch me on social media, which, by the way, this is Jeff Sekinger speaking, or you, more importantly, not even social media, you see me in real real life, you will see that I am disciplined in my own life. I get up around the same time every day, pretty early. I go through my morning routine. I work out nearly every single day, and I eat healthy, and I make sure that everything I'm feeding my mind, the diet of my mind, is healthy, so that I am in a good place to have success, not just in my health, my relationships, finances, but in my trading, because I know it's from a pretty much a top-down type of thing. All right, so I'm going to go over one of the primary trading strategies right now, but realize if you don't have this discipline, that's probably going to wreck you. So if you're not disciplined in your personal life and you're not disciplined in your trading strategy, you're going to lose money. So it's up to you. If you want to lose money or you want to make money, that's completely up to you. Steps involved. So number one, you got to have a thesis going into the trade, all right? And that can be based on a technical or a fundamental analysis that you do, with a strict plan on where you would enter, where you would take profit, and where you would exit at a loss. So realize that if the trade goes against your thesis, you have got to be willing to cut losses. The main thing you want to do is let the losses be as small as possible and happen as infrequent as possible, and then let your winners ride and also make up the majority of your trades. So you want a higher win rate, obviously, and a higher profit per trade as well. Okay. Prior to entering the trade, ask yourself, is this following my trading plan and rules I have set for myself? If the answer is yes, take the trade. If not, pass. Number three would obviously be enter the trade, manage the trade, exit the trade, and then document the trade in a trading journal in order for you to review later. There is no way to get better without measuring the things that you've been doing. So you have to measure your progress and history in order to say, hey, here's the complete scenario that I was going through. Here's the mindset. Here's the thesis I had going into the trade. Here's where I was going to cut and manage it. And here's the outcome of what happened. And if you do that over and over again, and you're looking at dozens of trades a week, you're going to spot patterns. Once you start to spot patterns, you're going to get better as a trader. So you have got to document the process in order to realize where you are making the mistakes. If you're not documenting the process and monitoring your progress and taking out the things that are causing the mistakes, you're just going to keep making them over and over again, which is going to cause you to keep losing. So these 6 things are really, really important to do when going into the trade. Now you might be saying, okay, well, what is the thesis? What are my trading rules, right? Well, let's figure this out. Example of my rules. So this is a good thing to put on your desk. Wherever you are trading, even if it's on a laptop and you're doing this from all over the world, have a sticky note. I think it's better to have a sticky note. Absolute minimum, you need to have it on a notepad that is open on your computer that you're literally reminded before every single trade that you're making. If not, the sticky note is even better because it's always going to stay there no matter what screen you have up. And it also pops out, more often. So if you can just put it at the bottom of your monitor or on your the screen of your computer, it's going to help a ton. Question you should be asking first and foremost: is this a force trade? Is this a revenge trade? Which, a force trade is like, oh, I got home from my job at 6 p.m. and I want to trade now at 6:15. So let's go ahead and enter a trade. That would be a force trade because you're forcing it on the market. You've got to let the market bring you the opportunity and then take the entry once that happens. Is this a revenge trade? Maybe I've been losing a lot recently and I'm like, hey man, I need to make money back. Let's enter this trade right now. That's a revenge trade. You're trying to take revenge against the market, which is never very, very, very likely that it's not going to go in your favor because that's an emotional based trade. And then is this a spur of the moment type of trade, right? So like, is this like, oh my gosh, I just saw this candle go way big and I think it's going to break out. Let's go ahead and enter it, right? A lot of the times people get really excited and get emotional when they see X, Y, and Z happen or this CPI data came out. Let me just go ahead and put this in real quick. That is an example of a spur of a moment type of trade. So is the probability in my favor? So I like to ask myself, so first of all, I ask myself this. The second thing I ask myself, so this is after I'm spotting an opportunity, right? So I think I have an idea of an opportunity that I want to take advantage of. So now I'm running through these questions to myself. Number two, is it the probability in my favor? So based on what the main thing that I kind of ask myself that I also will put on notes right next to my desk is how can I not lose money? And it's, believe it or not, it is literally that simple. If you start to ask yourself that, not before every trade, but just like in general, how can I not lose money? Well, what happens if you don't lose money? You generally make money. So it's best to find the ways to remove the things that are going to cause you to lose money. This goes back to Warren Buffett's rule. What's the two rules to investing? Number one, don't lose money. Number two, don't forget the first rule. I know that might sound stupid, but that is reality, and it's from one of the best investors of all time. And if you can carry those principles and kind of ask yourself, how can I not lose money? The best thing to do is to put the probability in your favor. If you're entering a low probability trade because it's a force, it's revenge, it's kind of spur of the moment, it's emotional, well, guess what? I wouldn't check off the answer. So I want a no here. I want a yes here, right? Is the probability in my favor? Yes, it is because of X, Y, and Z, which I'm going to talk about here in a second, and I'm going to show you an example. Am I making the best possible entry? That's another thing. A lot of times you'll spot the opportunity and you'll be like, oh, let's enter it right now because you're forcing the thing, okay? Or it's spur of the moment. Did you get the best possible entry? A lot of times the answer is no. And a lot of times you just got to wait. You just got to be patient. Wait for the thing to get to where you want it to be in order to enter that trade. And I'm going to show you some examples. Is this a chart pattern? So here's the three main rules. These are kind of questions that I'm asking myself, right, on more of like a emotional level. These are the things that I have to have in the trade. I mean, I have to have these correct answers. Am I making best possible entry? Yes, yes, and no, right? So no, yes, yes. And then number 4, is there a chart pattern clearly identified? Yes. And you've already gone over, chart patterns, head and shoulders, double bottom, that type of stuff. Is there divergence in the price action? So I'm going to show you what divergence means, but I use 2 different indicators a lot of the times when I'm trading, and I look for divergence. If there's not divergence, I'm not taking the trade on this specific strategy. Is this trade at support and resistance? Yes. If it's not, I'm not taking the trade, because these things, if these three things are not here, then the probability is not going to be in my favor, and I could be losing money, and I don't want to lose money. I don't like losing money, so I need to make sure that these three things are all here before entering the trade. And then once I'm entering the trade, then I'm doing these things, which let's go ahead and go into an example of how I would potentially enter this, and what, actually show you an example right on gold, which just literally happened. So this is gold. This is volume beneath. That's what these lines are here, these red and green lines. This is the RSI, which is the relative strength index, which most people use wrong. You've already heard on how to use this in the course. This is something called the CCI, which is another oscillator, which also shows the strength of that specific asset and the likely trend. And I use both of these as spot divergence. And then this is the ATR. So this is just for really used as a stop loss. So this is the average true range over the last 14 candles, which just tells you, hey, what is the average range of the last 14 candles of what you're looking at here. So I'm looking at gold on a 15-minute time frame, and I will look for, and a lot of times I like to trade gold on this time frame. I just found it works for my strategy. So what I identified is we're in a big uptrend, which you can use something called an ADX to also try to determine the direction of the trend, and I always like to trade with the trend. So if the trend is up and the ADX is showing me the trend is up, I'm not going to be going short, okay? But if it's up and I have a long position that I could potentially enter, then I would go long. All right? And right now it's up. So it's a bullish trend right now. So the market comes up. And by the way, this is right into resistance too. If you look at gold and even go back all the way over, I don't know how far it was, probably. Got to go back a little bit more. So we've had a lot of resistance right in this area right here. And I do believe that it's likely heading up to potentially a triple top, see a nice little rebound. But it's good to know kind of the general structure of what's happening. And also the macro environment is also showing that gold is with a lot of fear. There's wars overseas, high inflation. All those things are good for the price of gold. So the macro is telling me gold is going up. We're now breaking past this high right here, and likely to continue up here. So the whole, not only is the ADX showing it's up, but also everything is pointing up for gold. All right, so let's go ahead and look at the scenario that just happened. Right, so we break up high. Okay, cool. We come right back up. I did not enter here. Right, we touched this line. We had support 1, 2, 3 times here again. We came up. We came right back down to support. So I already had this line drew right here, but I didn't take this trade first right here, okay? I waited for a few things to happen. Number one, are we at support? Yes, we are, right? Which is really the number 6. Are we at support? Yes, we're at support, okay? Is there divergence in the chart? Well, let's go ahead and see. Is there divergence? I didn't enter here because there wasn't divergence yet. Okay, we did see the RSI oversold. We did see the CCI come way down as well, but that does not always show you that you need to enter here. This could keep going down and down and down. So what I look for is divergence, is I look for a really big gap in the price, which true divergence would have been, hey, this is a big uptrend right here, right? Where you've got a low here and then you've got a higher low. Same thing on the CCI, right? We've got a low and then a higher low. True divergence would have been this price coming all the way down to where this is, or creating a new low, so that it's like, hey, this isn't an uptrend that shows a strength up. And then this also price action is either made a new low right here and is bouncing, or came right down to the previous support where this price was. But in this case, still there's a bit of divergence because it came very, very close. It bounced off of support, and then this was a big leap from where it was all the way down here to where that is. It was higher than what this move was. So still there is somewhat divergence. So that is true as well. But true divergence again would have been it's this low and this new low came right down to about a break even, or it came a bit lower where you're seeing the price come down, but you're seeing higher lows in the RSI CCI. But again, still I would consider this divergence because this is at a higher slant than what this line is at right here. So I do still would consider that divergence. So yes, support, cool. Divergence, yes. Are we in an overall uptrend? Yes. The probability is in my favor. And then the last thing, is there an actual chart pattern clearly identified? Well, yeah, there is. Number one, we double topped over here, and you could almost consider this a triple top because we topped here, here, and here. It would depend which time frames you're looking at it, but that was a rejection off of resistance. Then we came right back down to support, and we had a bottom here and a double bottom here. So this is the main chart pattern that I was really looking for, is bam, bottom, double bottom, right at support, divergence, cool. Then what I'm looking for is I'm looking for this to actually bounce off of here. So I'll usually will put after it bounces. So there's two things I'll do. It depends on how busy I am during that particular day. But if I see this playing out, I'll literally put a buy limit right here. So I'll put a buy limit right at support. It fills the order. Bam, I'm in the trade. Another strategy, if I want even a higher probability, but willing to not make that amount of money, like the most amount of money possible, is I will wait for the actual bounce off of support. Also see that the indicators are showing the uptrend is definitely established, and there was just a low made here, and then I will enter right in here. Okay, and sometimes I'll even look for these. Like we already had to bounce once, twice. Bam, that's confirmed. Then you kind of see this little consolidation in here, which this is a bull flag. Bam, I would enter right inside of this flag because I have identified this pattern, and that is a bullish pattern. When you see a bounce off of support, and then you see this type of flag pattern, that is very bullish. Okay, so I'd enter right in here, and bam, I would take this up. Now, the question is, okay, Jeff, where were you putting your stop loss outside of that, right? So after I entered here, stop loss is the ATR plus the low right here. So 1949, and then the ATR, which again is the average true range of the previous 14 candles, 2.529. So I would add 2.529 at the bottom of this, 1949, right? So we're pushing it, the stop loss, all the way down to about 1946, 1947, and the stop would be right here. Okay, so it's just the previous swing low plus the ATR. That's where the stop loss is. Then typically what I like to do on my trades is I like to scale out of the trades. So a lot of the times what I will do, and again, it kind of depends if I'm like super active that day and all I'm focused on is trading, then I will implement a more aggressive strategy and scale out of the trade strategically, and also trail a stop loss up strategically. Or if I don't have that much time, what I will do is I'll look at a fib retracement, which is from you always go from left to right, and this just tells you where there's likely to be a lot of potential resistance in this case, where price can bounce. Okay, we just had this move. Where is it likely to bounce to now? The key levels really are 0.382 and then 0.618. But in this case, what I'll usually do is I will usually scale out of the trade at 0.382. So I'll realize, right around usually 20% of the profit here. 0.5, I'll take about another 50% of the profit. And then 0.618, I'll take another 30% of the profit. Okay, and then I'll scale out completely. So I'm taking a little bit off the table to protect the trade here. I'm also taking some off the table here to take the largest portion at the midway, and then 0.618 as well. That's where I would realize the last 30% of the trade. So you can go ahead, literally put all those orders in as this is playing out, right? So you could put a buy limit here. You can have your take profit here, here, and here. And then you can also have your stop loss that is automatically placed outside of the swing low. All right. So that is an example of scaling out. If I did want to stay in the trade longer, and I could be more active with the trade because I don't have anything coming up. I don't have meetings. I don't have anything. That's all I'm doing. Then what I would be doing is just trailing a stop. So like I'll wait for this. I entered in here. Okay, we had this move up. Great. We had another kind of type of flag pattern. And then we came up higher. Well, we just created a new low right here. So I would now move the stop loss from down here, drag it right back up to here. Okay, we just came up. This is somewhat of a new low, and I would likely drag it right back up to here. And then we come right back up here. Did we create a new low here? Yep, and right here. Okay, I'd bring the stop right up to here, expecting it to potentially go higher, but if not, okay, well, we just stopped out the whole trade in a lot of profit right here, which is perfectly fine. If you keep trying to swing for home runs all the time and you're like, let me just ride this thing out until it goes, gold goes doubles in price, you're going to just keep losing because you're getting too greedy. So a lot of times I will just trail a stop loss up right outside of the previous swing lows and just wait for price to then retrace and take out the trade and profit. All right. So that is a pretty decent example. Honestly, not the absolute best scenario, but I wanted to show you what an example, what a recent example actually looked like from the other day. Let me show you another one. So we'll show you Great British Pound to the Japanese yen. Okay. So this is another really great example. If we were to look at what price has done this entire time, obviously this has been a really strong uptrend. So we're on still the 15-minute time frame, but if we were to look at how high this just went, that's 4.6% move on an FX pair is pretty big, just to be completely up in this uptrend. Now it is actually broken down and confirmed the break. Okay, but now we are starting to get some consolidation here, and you see the divergence approaching. Okay, I wouldn't enter right here, but I would be waiting. See how there was support here, and there was resistance here. Let's go ahead and see if there's anything back. Price come all the way down, almost. So what I would be doing is, this was a really strong move, so it's showing a lot of momentum in this direction. Now, what I would still want to do is, this is still really considered an uptrend, although it did obviously break this support, so it could be, get some exhaustion, but now we're showing some divergence here. So I would be waiting for a confirmed move outside of this little high right here, and then that's going to, and obviously I like to see the RSI come way low down here to oversold territory in the low 20s, then it come back up. And if it's approaching right around 50, same thing with the CCI. If it comes way down, especially past negative 200, and then it comes right back in and starts to trend upwards, I like the CCI moves usually quicker than the RSI, so I like to see the CCI above the 100. I like to see the RSI above the 50 on a clear reversal like this. And then I like to see how this is price action coming way down, big purple / obviously red candles. showing a lot of momentum to the downside. Then you start to see the candles getting smaller and smaller and consolidating. Okay. What I also want to see is I want to see the volume kind of picking back up. And I do want to see price break out of this high, because then what we could have, what is likely to happen, which it has not happened yet. So I'm not going to enter here because you can have divergence and then price just keeps going down. What I want to see, because what we're going to probably form here is I would not be surprised if we come down here, we're about to form a little inverse head and shoulders. So this could be the left shoulder right here. We're going to come down. We're going to form probably a head. Maybe there's a little liquidity grab down below. I wouldn't be surprised if we come up and we're either going to come test this. So we'll probably have, the head here. We'll have a potential bounce off of here, create the right shoulder, and even a potential cup and handle pattern. And then, bam, once we start to break out of this, that is where I would enter long on that trade right there. And then I would be using the previous swing low plus the ATR. I would make sure that it makes sense from like a risk reward standpoint. Okay, so I would most likely be taking profit up in this range. All right, and my let's see what the ATR would put me at. So we'd be at 0.14. Let's say this is the low right here. 0.14 would put us about right here. So our ATR would put us about right there. And our risk reward would be nice. So I would be carrying this trade up again to previous resistance here. And I would likely be exiting here. Again, you could also use the fib retracement. So we want to go from the high. Let's say that this was the actual low. Okay, now where would we be potentially exiting if we wanted to scale out of the trade, which a lot of times is not a bad move. 0.28, or excuse me, 0.382, 0.5, 0.618. Those are all pretty good exit areas if you wanted to be a little bit more like conservative and lock in profit. Realize, here's another thing I always tell myself. Look, if I can manage to not lose money, that's great. But also, if you're taking profit, you're never losing money. I like to tell myself that over and over again, right? Because yes, you could try to hit a home run, but the chance of you hitting a home run are so minuscule. So like, you got to not be too greedy and realize every time you're taking profit, you're not losing money, which is exactly why you're in this game to begin with. So it's really important to get out of the mindset of trying to hit home runs all the time and just letting it play out in your favor based on probability and making sure that you are consistently taking profit. If you're consistently taking profit, you're going to win over time. Okay? So this is another example that may play out here. We will see. Again, if I wasn't playing with my rules here, I would just divergence. Let's go ahead and enter. No, let's not enter because I don't have a chart pattern clearly identified. And yes, we are kind of at a support zone because there was a fair amount of resistance over here and support. So there was support here, and there was resistance right over here as well. Okay, so this is a decent area. We've got some divergence, but I don't have the chart pattern yet. I do have the big purple candles that shows big volume to the downside. Then consolidation, you see volume starting to slow. Potentially another trend is being established here, another short-term trend, right? So I do have the price action in the candles that makes me feel pretty comfortable that there is likely a potential reversal here. But we don't have the pattern yet, and it hasn't broken out of this yet. So I am not going to enter this. You don't want to be entering in here because this is no man's land. You don't know what the hell is going to happen. You want to wait for an actual clear break of this, because then once you break this high right here, then that greatly increases your chances of it continuing up. Okay? And I don't care that I'm missing this. I don't care that I'm missing this amount of potential profit, where if I would have entered right here, I would have made more money. Well, yeah, you would have also put yourself at more risk as well of you getting stopped out too. All right, so you always got to not be greedy and have enough patience for this thing to play out. All right. That pretty much summarizes 2 examples there. If you're a part of any of our communities and things, you would hear more of these types of examples, and you're also going to just learn more about how to identify these things. But it comes with time. It's just important for you to really you just got to spend time on the charts. That's it. And unfortunately, you're just going to have to learn from your own mistakes as well, because I can tell you a zillion times not to do this and to do that, but at the end of the day, you're not going to learn until you actually do it. All right. Thanks so much for watching. I'll see you on this next video.